Hello. Hey, Andrew.
Hello.
What's up,
How's
Jim?
it going?
Hey, Tyler.
Hello.
Good to see you.
Great to see you.
We will have some laggards, as we always do, but this is also a recorded session with replay available. So rather than waste our collective precious time, we will begin. I'm very excited to announce the third episode of our webinar series. We like to do things difficult. It can't be a podcast because you got to share screens and we got to put our own stamp on this. Um, and third episode of the Cutting Edge, which has been really fun for us so far to basically just admit we don't know what we're talking about at Fundamental Edge about AI. So let's just learn out in the open by having conversations with smart people. And what we found, kind of what I found over the summer is I was having a lot of conversations where I was learning the basics, and it's like, well, I wish like we could just share this with 500 other people at the same time. So that's really what we've been doing. And whether you enjoy it or not, I personally have been learning a lot in the first two episodes. We have a few more interesting ones lined up, and very excited today to welcome Jim Falbe and Tyler Thomas from Saguaro Capital Management. This will be a unique session because this is the first time we've gone to the other side of the table and asked investors what they're doing with the fundamental investing process and how they're applying artificial intelligence into that process. So I will, in just a short moment, I'll have Jim and Tyler give you their backgrounds, but at a high level, Jim is one of us. He's a stock nerd. He was a portfolio manager for nearly 8 years at Vulcan Value Partners, which is a very well respected fundamental investing firm out of Birmingham, Alabama, where he really started exploring the potential for AI in the investment process and brought much of that process to his firm that he runs now, Saguaro Capital Management. And so, I think if anything, the theme of this session is, are you trying to figure out how to apply AI into the investment process? I am too, but Jim and his team have been doing it for almost a decade. And so my hope for the session is that we can distill some of the things that their team has learned that work well, almost probably more valuable, some of the potholes they have stepped in over time, and just get a check-in of what is possible today with these tools and where they see these tools going forward for the next 6, 9, 12 months. And then we'll just kind of get a survey of some of the other external tools that are out there that populate many of our other episodes of the Cutting Edge. So that will be fun as well. So Jim and Tyler, thanks for being here. Do you want to just kind of start by elucidating your background a little bit more and fill in the many gaps that I didn't in your journey as fundamental investors?
Well, Brett, thanks for having us on. I wish something like this existed 9 or 10 years ago when we got started, so we could have made maybe a few fewer mistakes than we did. So thanks for putting this together. I'm sure people are going to find a lot of value in being able to avoid the things that other people got wrong. So yeah, background, as you said, Vulcan Value Partners for nearly a decade. It's a long-only fundamental shop, very much takes the Warren Buffett approach to investing, trying to find great businesses and then buying them at a discount to what they're worth. And so I was fortunate enough to join when it was $1 billion boutique and kind of ride it all the way up to being a $20 billion institution. And so a few years into that journey, I was actually just reading the newsletter called What I Learned This Week by 13D Research, which I'm sure you and several people on the call have heard of. But Kirill Sokolov, who's the publisher, was on a huge kick, just saying, hey, AI is going to take your job. It's going to change everything. You're all doomed if you don't adopt it. And so that led to this simple idea of, man, someone's going to make a ton of money doing this, and some shop's going to revolutionize the world, and that's going to be amazing. I can't believe what multi-billion-dollar institutions is it going to be? And sitting there looking out the window at kind of the green canopy in Alabama, just like, wait a second, we're a multi-billion-dollar shop. Why couldn't we do this? So I called up our CTO, just like, hey, do you want to take a risk on something? He's like, sure. So we just rang up IBM. I mean, again, this is a decade ago, and we were just like, hey, could we potentially partner with you guys to use Watson for our use case? we didn't know how to do it. So we thought, well, they seem like they know what they're doing. They won at Jeopardy, and they were kind of trying to get involved in the medical sphere at that point in time. And they were like, yeah, sure, we'd love to partner with you guys. Tell us about the developers you have on staff, some of the programs you've brought to the forefront thus far. And, we stopped them. Just like, can you tell us what a developer is? So we literally had no background in this stuff. I mean, we just didn't know anything. And they were kind enough to tell us we were not ready for Watson, but they made an introduction to one of their kind of third-party service providers, so just a consultant who, they took a piece of kind of off-the-shelf IBM software that was called SPSS Modeler, and it is a data science program that has really powerful machine learning tools in it, but it's a graphical user interface. So you don't have to have that kind of programming background to be able to actually build something. And the simple idea that we had at Vulcan was, one, we really wanted to explore this almost from an insurance perspective to just make sure we don't wake up 10 years from now and we're out of business. And what we did have, which was very helpful, was a 10 to 15-year history of kind of investment decisions that we had made as a firm, and specifically the data that was available up to the point in time when we made those decisions. And for us at Vulcan, we were very much a quality shop, again, trying to find these quality businesses and then wait for that opportunity to buy them. And so we knew when we had evaluated a company and had decided whether it was high quality or low quality. And our first proof of concept was just, could we take all this data from 15 years and train machine learning models to distinguish between high quality businesses and low quality businesses? And lo and behold, it worked. And it worked off the shelf. And the way we knew that, we kind of kept our own records of, hey, we've got these grizzled veterans on this research team that have been doing this 20, 30 years. We know what we're looking for. But of every 10 companies that we had evaluated, how many of them kind of cleared our quality bar and made it onto our watch list so that if they ever get discounted, we'd want to buy them? And our hit rate, frankly, it was about 20%. So for every 5 companies that I would look at, one of them would kind of end up making it onto this list, which we called the MVP list. It's the way we did things. And the very first proof of concept we did with the machine, the hit rate came back north of 50%, which frankly we were astounded by and didn't think this was possible. We're like, okay, we get how a machine can tell the difference between the picture of dog and cat, but really it can do high quality businesses based on financial information and the textual information that's available. Our research team actually didn't buy it. They thought there's no way this couldn't be the case. And so that justified a second proof of concept where we spent a lot more money to go much more in depth to see if it was true. And the second proof of concept came back again with a hit rate north of 50%. And the team's like, okay, that's pretty interesting. Where we think this could really benefit us, being kind of a US-centric firm, would be going into the international markets and becoming maybe more global. We kind of had the idea that one day we could launch a global product. And so we did a third proof of concept where we looked at the entire market of Canada and the entire market of the UK. And that process took more than a year. It was a very long process, but lo and behold, when we came back, again, the hit rate was north of 50%. And so at that point, the firm was just like, okay, we think we're onto something. Let's build it out. And we launched a full global build out where we put together a database. And at that point in time, there were not APIs in the CapIQ or FactSet or Reuters for the type of data that we were looking at. I mean, everybody had APIs for kind of your market data and stuff that people were trading on very quickly. But when it came to textual information or some of the fundamentals, we actually had to help build out APIs with our partners. So it was a lot of fun. We went to all the different conferences trying to find somebody else who was doing this from a long-only perspective, and frankly, couldn't find anybody. So anyway, after the end of 3 years, we built this thing out. It was adding value. And at that point, we said, could we take these same techniques and these technologies to other parts of the research process? And frankly, that's where we kind of stepped on a couple of rakes where we thought because we were able to do idea generation, maybe we could actually help, fill in some of the other blanks in the research report, whether that's trying to forecast growth or trying to understand capital allocation or whatnot. And so we saw a lot of promise, but we felt like we were at a crossroads because we built this $20 billion institution where we had a lot of client AUM. We had these investment mandates. And the risk was, if we keep going, are we going to fundamentally change what we're doing? Are we going to have to go back to our clients and tell them, hey, we're changing our process. You hired us to do X, Y, Z, and now we're doing X, Y, Z plus AI, and is that okay? And so really, we hit pause. We did this kind of big evaluation of, is this where we want to go as a firm? And ultimately made the decision, and it's your standard innovator's dilemma. It's what Vulcan had was great, and we wanted to keep that AI system, but we didn't want to go any further. And if we were going to go further with it, it probably needed to exist in a new wrapper and a new institution. And frankly, that's what gave rise to Saguaro Capital Management. So happy to talk more about that journey, but that's really the background. And one of the other things we were really excited about starting a new firm was realizing if we're going to really embrace all that this technology is, it needs to be in our DNA. It's not just taking something that you have before and then trying to jam, some new system on it. It's like, okay, I've got this engine and now let me put a turbocharger on it. It's like, no. Let's build something from the ground up, right? When you build an electric car, don't just use your chassis from a standard car and try to strap a battery onto it. No, you want to build the entire thing from the ground up to optimize and take advantage of these tools. And so for us, we've not only built a new firm around AI technologies, we've actually rebuilt our research process to try to take advantage of what's out there, so that our research team is supporting our data science effort as much as our data science effort is supporting our research. So, Tyler, anything you wanna add before we turn it back over?
I think that's a pretty good summary. Really emphasizing that the research team is supporting the data science team, and it's like that mindset that really allows us to collect all the data we need to create the best models to then help the research team. And just the buy-in from everyone at the firm to that process is such a big thing.
Yeah.
That makes a lot of sense. And I won't speak for my 76 friends on the call, but when I heard about machine learning prior to fall 22, the Chat GPT demo, I kind of just rolled my eyes, right? And this was well prior to Chat GPT. How has this latest evolution of LLMs and the power of the models that we're seeing now, has that accelerated your efforts? How has that impacted these efforts that were happening years before really this latest iteration of AI?
Well, I think from an external perspective, it changed everything. So the people who had seen what we had built at Vulcan were believers, which is how we were able to start the firm. I mean, we had 5 partners kind of originally who founded this. We had a lot of support from external investors, but almost every single one of them had been involved to some extent at Vulcan or knew of Vulcan and really had seen kind of what we had been able to achieve. There was a lot of skepticism outside of that. And then frankly, as soon as ChatGPT hit the market in 22, everything changed. I mean, we had everybody from Goldman Sachs all the way down to the smallest garage band, hedge fund you could name, call us up. I mean, probably 100 people just saying, hey, what are you doing? Can you help us understand what you've done and the right way to go? So we went from being kind of way on the outside to very interesting to a lot of people. So we got a lot of people cheering us on, a lot of people in kind of the institutional allocator space, trying to follow what we're doing, just saying, hey, you guys really are differentiated. Like you said, we've been doing it for a decade. I would say that the interesting thing that's happening right now is when people are hearing AI, they're thinking almost exclusively ChatGPT. They're thinking LLMs, they're thinking this textual Gen AI, or maybe, hey, it can produce a picture. And I think what people are forgetting is all of the other things that AI could do, that machine learning has done, that it's still capable of manipulating. So a lot of the tools that have kind of come to the market in the last 2 years, they're focused on helping to process text, but very few of them are focused on the numbers. And as you mention all the time, I mean, the core of what we do, it's the models of the business. If you don't understand the numbers, you don't really understand the business model. And so for us, our entire effort was really born out of how do we, what makes a great business? What does a great business look like? How do we find that? How do we do that financially and numerically? And we do not use large language models to do that. I mean, trying to use an LLM to do math versus just using a tool built to do math is nonsense. I mean, it's completely inefficient and it's not very good at it. And so, the change has been historically, we were using more traditional natural language processing models to try to understand the text. So if I'm trying to identify a competitive advantage, we used to say, well, we're looking for an n-gram. That's a 2, 3, 4 word combination that would imply the existence of, say, economies of scale, or would imply the existence of, IP or a dual-sided network effect. Whereas today, we threw that out because the LLMs are so much better. Once you find a business that looks great from a financial perspective, you can ask the question, hey, based on the text, what type of competitive advantages are likely to exist for this business? And please give me examples, yada, yada, yada. And then obviously on the flip side, it's, well, hey, here are the things we're trying to avoid. We want to make sure we don't get a business that has received a Wells notice from the SEC, or, hey, try to eliminate things that have asbestos exposure, things like that. So LLMs are much more robust. The unfortunate side is they're much more expensive, from a time perspective and also just from a dollar and cents perspective. But yeah.
So what is that roadmap? I mean, can we try and simplify that for, your friend's running a fund, $1 billion fund, and he says to you, hey, I want to do what you're doing. I want to apply more AI into my investment process. What are the core building blocks of both the preparation and execution of that tool set into the investment process in your mind?
I think that's it's actually a challenging question, because it's more philosophical than you would think. Because deep down, the real question we're asking is, what do you want your research process to be in 5 to 10 years? So, there's guys that I know who have had access to a lot of AI tools, and they've ultimately said, I don't want to use them because that's the part of the job I enjoy. I mean, there was one guy I spoke with at length, and he runs a $30 billion plus fund. He's really good, very well respected. If I said who it was, everybody would know who it is. Amazing. And so we were talking about the ability to parse tons of earnings transcripts quickly, to go through whatever progression in sentiment, one of the things you talk about, and how they change their verbiage just slightly and this and that. And I was saying, look at the power of this. And his pushback was, he's like, I love to do that. It's like, there's nothing I love more than reading 10 years of transcripts. And he's like, I'm not going to give that up. And I was like, okay, well, I don't know how you're going to be able to continue to justify using 10 hours of your time to read those transcripts word for word versus using these tools. But, I sort of get it. And I think a lot of people, what they're really looking for is AI tools to step in and take over the parts of the process they don't enjoy, but they want to keep doing the parts of the process that they do enjoy. And one of the things we try to do building Saguaro from day one is actually visualize, where do we think the world is going? And like you laid out, I think in the first presentation, you said, hey, here's my process at Fundamental Edge that I teach people. Here's the part of that process that I ultimately think will be replicable from a machine standpoint. Here are the parts that I don't think are going to be replicable. And I will tell you, when we've evaluated our own process, it looks very similar to your list. We may have some differences, but we have described to every member of our research team, their job 5 years from today is going to be an investigative journalist. They're out there pounding the pavement, trying to bring in those pieces of incremental information. I think you called it quasi-fundamental, where you're just picking up those pieces of information that maybe don't appear in the 10K. Maybe they don't. It's something you get in a call with IR. Maybe it's what you get from the scuttlebutt, attending a conference, or you're going out, you're visiting different sites and buying the product, whatever. That's how we visualize this job evolving. Because frankly, when it comes to parsing a 10K or parsing an earnings transcript, I will admit, I actually believe that technology today is better than me. And I don't think of myself as bad at the fundamental part of the job. I enjoy doing it, but I actually think the machine is better when it comes to picking up any individual data point. I mean, maybe I'm still a hair better when it comes to emotional tenor. And, do I think they're lying or not lying? But I think that's changing very rapidly. So if you look at the most recent iteration of the tool, so version 01 Strawberry from ChatGPT, it scored 120 on the IQ test. Okay, not 100, 120, which for most of the people on this call, they're still like, yeah, okay, I'm better than that. But that's the latest version. It's not going to decline. It's going to get better over time. And what that means is anybody with an IQ of less than 120, the model is already more intelligent than you are. And unfortunately, to go along with an IQ of 120, it has exhaustive knowledge of about everything. It's capable of reading large quantities of information, processing it in 15 to 30 seconds, And oh yeah, it never gets tired. It never sleeps. It just needs electricity. And so that's a really high bar. So when we think about where this is going, one, the models are going to get better, and two, the next 12 to 24 months is about the rise of agents. And what we mean by agents is you're going to have a model at the very top that you assign some kind of task, like create my research model or create my research report. And what that agent is going to do is it's going to determine for each sub-step of your research report or your research model what other system it needs to use. So it'll use a particular system to craft your Excel model. And there's some people who are focusing on Gen AI for just a DCF. That's a tougher thing. I think we're probably a few years out from being able to produce a really good DCF, but it will eventually happen. There will be another model that it uses to summarize the text of all the different transcripts of all the 10Ks. There will be another one that is used to actually put together the written report that you want. There will be another system that's putting together the graphs or the charts that you typically want to have in your model. And then it'll all feed back up into this top model, which then produces the output or the report for you. So that's coming. And I don't believe that anybody who is just doing this on their own is going to be able to beat a OpenAI or an Anthropic when it comes to producing some great model that sits at the top that's able to do this. I think where we really need to be on the journey is what is the data that we want to have that kind of underlies this. So the limitation of a Claude or the limitation of ChatGPT is they have access to all the free information on the internet. They do not have access to everything that's behind the paywall. So most analysts, when you're talking about good information, it's all behind a paywall, right? Like whether it's Yipit or just the fundamentals on FactSet, or whether it's sell-side research reports or buy-side stuff like a Morningstar, whatever, it's all behind a paywall. And so if you're a great firm, there is a corpus of data, one that you want and use today, and frankly, as the ability to process more information gets cheaper, you're going to want to expand that information set. I mean, all of us know if we had infinite time, I would love to go and scrape Reddit and look at Reddit for whatever company I'm talking about. I would love to look at Twitter. I'd love to consume every news report ever written about this business. I'd love to go through every single sell-side report. But I don't have time. I'm limited as a human analyst. And the wonderful thing about the world that's coming, the machines aren't limited by that. They're simply limited by, do you have access to the data? And do you have the money to pay for the computational power to actually do it? So
I think that's the tension that your friend mentioned that I struggle with, that I think a lot of people I talk with are struggling too, is I don't want to hand these processes over because I'm stubborn. I like doing them. I've been doing them for 5, 10, 15 years. I've been successful doing that. I think what some are missing is, well, by dedicating still a large chunk of your process, are you missing out on other parts of your process that you could be doing more? So maybe you walk us through, like, how did you learn to trust these systems to hand over some of that work? Two, how did you and your firm's process change as you gave up some of this work to the system? That freed up presumably 20, 30, whatever percent of time. How did you then deploy that incremental time savings to your process? And so what did the process before and after look like as you went through this journey?
Yeah. So the big area that changed for us originally, and I think is still a differentiator between us and most other firms, is on the idea generation side. So I used to spend probably 30% of my time just constantly looking for new ideas, because that's where, you get something. And the truth is, I have come to find that the ideas our system generates are on par with or better than what I would have come up with. And instead of me having to search and read and call and talk, it's just, let me go to the list and look through it for something that's interesting to me. And I know there's an incredibly high probability that it's going to make it over the bar of what I'm looking for from a qualitative perspective. And as you would imagine, and I think a lot of people out there will naturally think of this, but not very helpful in US mega cap land, right? Like, if the machine suggests to me Salesforce and I don't know about Salesforce, come on, that's not a value add. It just means I'm not a good analyst. But when it's the small cap space, incredibly helpful, specifically in three areas. One, just geographies that I'm not as familiar with. I'm US centric, and Scandinavia I know is great, but I just don't have the same level of familiarity there that I've got here in the US. Same in Japan, same in New Zealand, all over the place. There are geographies just not front of mind. The second would be niches that are uncovered, or maybe there's only one or two companies in that niche. And so you just don't have a lot of ways into that niche. I don't know when you get there, et cetera. And then finally, it would be businesses that we're biased against for some reason. So either we have an outdated idea of their business model, okay, this is the way they looked 10 years ago, or it's just something that we find a little disgusting. So, a great example, I'm sure some people on this call have heard of it, but we hadn't, was a company called MIPS. So MIPS, that's a Swedish company, and they actually produce the kind of frame that sits inside of a bicycle or motorcycle helmet. Started about 10 years ago, 15 years ago. They were researchers into traumatic brain injury, and they realized that most TBI was not caused from blunt force impact, but during an accident, it was actually the rotational energy of a crash that would really cause severe brain trauma. And so they said, could we produce new materials and kind of a new system that could mitigate some of this energy, some of this force? Fast forward 15 years, they succeeded at an ultra high level. They've got a huge IP portfolio, and today 17 of the 20 largest bicycle helmet manufacturers and most of the largest motorcycle helmet manufacturers, they use the MIPS system in their helmets. They found it was less expensive for them to just go pay MIPS for this $5 piece in addition to put a little yellow sticker on the back of their helmet to say, hey, we've got the best rotational energy system versus doing their own R&D, trying to build it themselves. So they've crafted this real niche of a niche. Again, bicycle helmets, not that sexy. It's not the thing I'm super excited about. The numbers are great. And the interesting thing here is a traditional screen probably would not have found this business, even if you're looking for great returns on, capital or free cash, whatever it is you're looking for, because with COVID, they had a massive, COVID spike of bicycle helmets getting sold, and they've had this just huge destocking over the last 2 years. So it's something where when you have a machine learning model, it's not looking at any individual year point and just eliminating something because, the ROIC dips below 5 for a year, whatever. It's smart enough to still say, no, here's a really high quality business. Here's why. Again, trades into geography that we probably wouldn't have gotten to. It's a super niche business, and it's something that we were kind of, I just thought it was gross. But when we look at it, it is a winner through and through. So got just tons of examples like that. But that's where it's really changed our process to free up more time to go deeper. And so I would say when it comes to building our models or doing our fundamental research, we're not spending less time putting together kind of our base level report. However, I know our analysts are consuming or processing a larger quantity of information, looking for yellow flags, red flags, or green flags about a business, and then pulling that information out just by using our system, which, it's going back and looking at 5, 4, 10 years of company data and asking whatever questions they're asking. So, we're still reading the 10K, still doing it kind of the bespoke way, but it's like we have a second pass from the machine checking our work. And so we can ask it to look through 10 years of history saying, do you see any disconfirming evidence from any of the conclusions that we're coming up with? And, once in a while it does. And then finally, it's really helpful in our research meetings. We're trying to mitigate our own bias. And so we can ask the question, hey, do you feel like we're following our process? Are we being emotional? Where are we missing something? What part of the process are we not engaging? So if you think about it, everyone talks on checklists. It's nice to, in essence, have the machine able to function like that checklist for us in real time and just be another analyst that's unbiased. And I think the analyst would tell you it's nice having that check against the PM. So we totally flubbed on Dollar General. We bought it. We got killed like other people, and we did get out. But when we're doing our postmortem, if the analysts are like, Jim, you were really the one that was the bull on this, that's a tough conversation. But when we ask the machine, hey, who was the most bullish person on this name? Who was maybe emotionally attached? The machine's like, Jim, it was you. You were the most emotional analyst. It was your fault. It's unbiased, and it's hard for me to take. I talked to Tyler later. Was like, Tyler, you need to fix the machine. But
very Bridgewater-esque, right? No hiding.
Yeah.
That's great. And what idea generation, especially for broad generalists, obviously really resonates. I think pretty immediately. what are some of the use cases for the existing portfolio? Can you talk a little bit more about the red flags, or how are you using the tool once a name goes in the portfolio?
Yeah, so that's an area where we're still building. We obviously will, from time to time, just run our portfolios through the machine to say, hey, does the computer still believe these are high quality companies that deserve to be on the list? I would say the ones that comes back and flags are ones we were already aware were probably questionable, but we have that. The other thing, which goes without saying, our database is updated, I believe, on an hourly basis from most of our providers. Is that correct?
It's just whenever they get the document dumps. I think it's like an hour delay or something because we don't need that full real time for most of what we do.
Yeah, but every 8K that comes through, every news report, every updated document, the machine will review it, summarize it, and send it to the appropriate analyst. So if you're the lead analyst on a name, either in the portfolio or on the watch list, if your company puts out an 8K, it's going to show up in your inbox summarized in 2 paragraphs. And if it's something that's interesting or meaningful, you can then go and do further work. So it's like having a junior team, I guess, that's following everything for us in real time. And if something's important enough, it percolates up to the surface. But to me, that's table stakes. I think most people probably have something like that through this provider or that, but we've kind of built it in our own customized way so that it's doing it the way we want it done, which,
That makes sense. And can we dig into just the mechanics of building the system without kind of disclosing anything proprietary? Like, what are the big lifts in terms of getting the data, getting the internal data, getting the corpus of external data? What are some of the tooling, any vendors that you'd be willing to kind of highlight? Like, how, if I were running a firm again, like what's the roadmap to get from where I'm at with no experience to where you're at with your advantage of a decade of experience?
I think the hardest part, and I'm going to let Tyler answer this question, but I think the hardest part is just the learning. It's going from admitting what you don't know, learning, and then finding great partners who can help you. So I think it's maybe a bit hubristic if someone who's been a portfolio manager their whole life or an analyst their entire career wants to step in and say, hey, now I'm going to be an expert at data science too, or I'm going to be an expert at machine learning or AI as well. It is similar, but if you're going to get someone who's in that top decile, it probably isn't going to be you if you don't have a background in that already. And so at Vulcan, the part that took us the longest was finding those first few critical kind of partners and hires. We started with consultants, then we moved on. We found a gentleman who had helped build the Cheetah supercomputer at the University of Alabama, Birmingham, which is one of the top 50 supercomputers in the world. He came on board, helped us build out our tech stack. And then from there, we were able to recruit a few kind of real young guns who were super talented. Tyler was one of them. And once we had a core group of 3 or 4 who were really good, at that point, it was a lot easier to recruit great talent and kind of build out from there. But finding those first few, that's the hardest part because you really do need people who know what they're doing. But you've got to have someone who's got a foot in both worlds. So someone who understands what's possible from a technical standpoint, but also understands what it is you're trying to do from a research perspective. So most of these projects fail for 2 reasons. First, you don't have senior management buy-in. Can't tell you how many times we've met someone who they've actually got the skills, they've got the vision, but they don't have the senior leaders at the firm bought in, and they just can't get traction. I mean, if the head person isn't willing to spend money, it doesn't matter how smart you are, you can't get this done, right? The second reason why these things fail is a lot of people say, let's do AI, but they never set concrete business problems or goals that they're trying to solve. And so they end up throwing a whole bunch of money at the wall trying to figure out what sticks, and it doesn't benefit them in any way. They may have some whiz-bang fancy system that looks cool and got nice charts, but it's not actually contributing to their core business, and so it falls apart. So step 1 is you got to get buy-in. Step 2, you got to figure out what problem you're trying to solve, because once you know the problem, you can probably find the technologies. Step 3 is you've got to find the people. You've got to have someone internally who can do both the data side and the research side to kind of be the visionary and lead it. And then you've got to have great people on the data side. From there, the hardest part of this problem is the data. Anybody who actually does machine learning will tell you 95% of the work, it's data, data, data. You've got to source the data. You've then got to clean the data. You then have to join the data sets if you're going to use more than just one to actually make them play nice together. I mean, this is not an easy undertaking. We have, I mean, you want to go through our database a little bit, kind of share what's in it today and where we're going?
Yeah, and I guess before hiring people can actually like create real value, you have to have the internal data, which we had historically just like in Excel sheets that were computer readable that down the road we could parse into the database to actually use, but you have to have that data in the first place that you're collecting and can actually use to be able to extract the value. Um, right now, our main data provider is CapIQ, and we get like all our fundamental financial data from them, and it's delivered directly into an on-premise Postgres database. And we have a couple on-premise Postgres databases that handle it, one just for the Express feed data from CapIQ, and then our main actual database. And then we have a few other data providers that are provide like smaller amounts of data relative to CapIQ, like Fred or USPTO patents. I'm trying to think what else.
Well, you want to talk about how many quantitative pieces of data are in the database, how many qualitative pieces?
So right now we have around 11.5 billion quantitative data points and I think 32 million documents across the patents, filings, and transcripts. So quite a few, but for like text, we're still at the scale where something like Postgres works. First, down the road, we're going to have to switch to a database that can handle large amounts of text, because in that realm, we're still at a small scale. And we kept it on-premise just for cost reasons, plan on scaling it to Azure or something in the future, but just did it because for the price, we could get the most throughput.
Yeah, but the thing that's really hard to overstate is just how much work it is to get pieces of data from CapIQ to work with pieces of data from FactSet to get it to work with pieces of data from TGIS. Because you've got to accurately define what your coverage universe of companies is, and you have to make sure that every single data point that comes in is properly tagged so that it's associated with the right business, the right industry, etc. And you think, oh, 99.9% accuracy is good. Well, you've got 11 billion quantitative data points and you have 0.1% inaccuracy. That is a lot of work to get that fixed. And so you quickly realize that a lot of these companies, they provide you these data streams and they have varying accuracy levels in their own data. Like we've all found that hiccup occasionally in our own models if we're pulling data from somebody where they got something wrong. And so it just takes time and a lot of effort. So that's probably step 4, whatever. And from there, you've got to find the right models for the job that you're trying to do and figure out how to do it. And with those models comes feature engineering, which is if you're going to make models useful, you've actually got to have those features, which are whatever it is that they're looking for, or whatever it is you're looking for. They're going to help you be predictive in any way, shape, or form. So we can go as deep down the rabbit hole as we want, but I also don't want to just get too technical.
I think that's a relevant point to kind of to stop on though, because we can sit here on whiteboard and draw up this vision of all of these APIs of external data and internal data coming into this dashboard to apply LLM reasoning on top and generate these great investable insights. But it seems like there are a number of barriers to doing that today, right? Like, can we just walk? One of those would just be this data engineering piece. One is just wallet, right? The size of budget to be able to ingest all of these APIs. We talked earlier about the context window. Like, what is that a possible exercise today? And if not, what does it take for a firm to get there at some point in the foreseeable future in your mind?
Yeah. So our North Star, the goal for the last 10 years has been and will continue to be, ultimately, we want to analyze and value every public company daily and to do so with kind of ever increasing quality. When we set out 10 years ago, we knew there was no way, it wasn't possible. Just like, one, we don't even think we could do that. We don't think we can analyze or value business comprehensively, let alone daily. I would argue that today, I believe it is possible. I'm not going to say it's possible at the level of a world-class analyst, but I do think it is possible to both analyze and value every business in the world and to do it on a daily kind of cadence. I think it would be cost prohibitive for probably everybody except the very, very largest firms, but I think it could be done if you had a big enough pocketbook. So I think the real question is that cost curve, it's decreasing by more than half on an annual basis. It's probably going down by about 60% per annum. So 3, 4, 5 years, I actually think even a firm a little bigger than us, but I think a $1 billion firm would probably be able to afford a system that can do that. So in essence, a synthetic analyst, except it's an analyst who can look at pretty much everything on a daily basis. So I think that's coming.
I will say on the flip side, the data seems to be getting more expensive as like the cost of like intelligence or compute goes down. That seems to balance it out almost.
And there's more data sources every day, right? There's another all data stream seems to be born.
Oh yeah.
So capturing comprehensive data becomes a expanding wallet issue as well.
100%. Well, I think I can't imagine that we exist in a world forever where the SEC does not make more information kind of publicly available to everybody. Because if you don't, you're going to have a very unequal playing field in the markets where you're going to have those with access to data and you're going to have those without the access to data. And so the whole reason of having the Edgar database and the SEC requiring everybody to publicly put the information out there was so that it was democratized. And I think a lot of these people, there's got to be pushback at some point. But that's, I don't have any insight into that. Who knows? Maybe it doesn't happen, whatever. But yeah.
I have a few more questions, Jim, but we should, Jim and Tyler, but we should get the group involved. So if you have any questions for Jim or Tyler or Andrew or myself, but primarily Jim and Tyler, go ahead and hit the raise hand button. If you're shy, you can drop in the Q&A and we can just verbally express your question. So for the next 40 minutes or so, we will go into more Q&A, unless Jim or Tyler, you had any kind of closing thoughts on the initial framework.
No, I feel great. I mean, and we're happy to kind of show people some of the tools that we have if that's interesting to anyone. But what we've built is really kind of a collection of systems. So it's not like we have one system that does everything. We have a whole slew of different kind of techniques, technologies we put together that enable us to do different parts of the research process.
Great. All right, we have one from Anonymous. Over time, it seems that use of AI within the construct of a robust investment process will become table stakes, much like alternative data. What is your view on market efficiency and availability of alpha pools, say 3 to 5 years out? And what advice would you give someone in our shoes today to prepare for that?
That's a great question. For us, we've really viewed it the same way. We think that AI is going to become ubiquitous. Everybody's going to use it, period. It's just like Excel or any other kind of, large data warehouse or even computers in general. If you're not Warren Buffett and someone comes to allocate money to you and you tell them you don't use a computer, good luck. Like, no way. But AI is not going to be a differentiator. We believe it's going to be an amplifier. So if you have a process or you have a philosophy or a system that can generate alpha today, we think that AI will help you amplify or accelerate that. Now, if you don't use AI, your process is probably going to get left behind by the people who do. But if you are capable of generating that excess return of that alpha, this is going to help you do that at a higher level. Now, to make that happen, what you've got to realize is that your process or your system or whatever it is needs to be explainable to the machine. The machine has got to be able to learn what you do. And I think there's two potential ways to do that. One would be to craft a curriculum like what Brett has put together for Fundamental Edge, where he's broken his process down step by step by step by step. If he's capable of training a person to do it, he's probably got a leg up to train a machine to do the same thing. The second potential way to do it is simply to capture all of your own internally generated data. So when we talk about our research team supporting our data science team, one, we record every single one of our research meetings. So it's fully recorded, it's fully transcribed, Tyler and the team have put together a great system that marks out who's talking, exactly what they're saying. We have that. And additionally, all of our research reports, they are machine readable, fully and completely, and they're standardized so that the machines can go in, access various parts of the report, take it out, and then ultimately train on top of that data. So we're trying to capture more and more. When we talk to companies, we ask them if it's okay with them if we record and transcribe the call, et cetera, because anything we can get, even if it's not useful to us today, we believe that a year, 2 years, 3 years from now, it will be useful, and we want to have that for our models. So I'd encourage you, you know it's coming, you need to be preparing the internal data today to take advantage when those cost curves cross, and you can then use that data inside your internal compute.
Yeah. Even if you aren't doing stuff now, collecting that data is so important so you have the history. You're not 3 years down the road just starting to gather data. At that time, you have a longer backlog of your investment process over time. But so even if you're not doing it now, it's important to start collecting the data.
You would not believe how many people we've talked to who historically they were just deleting everything, which I can't believe. I would have never thought that was the truth. But people are like, hey, I kept it for 2 years and then we just deleted it because we didn't want to keep this old stuff around. And I'm like, that was gold for the future, and now it's gone, and you can't get it back. So save it.
Right. And similar question from Shamika. Hello, Shamika. What do you think about the impact of AI on market efficiency as financial and technological hurdles to implement AI come down? Where will the alpha come from?
It's a great question. So will markets become even more efficient with the advent of AI? I can make both arguments, right? Like I think maybe you have a more broadly kind of disseminated standard information set where everybody is playing from that same information. We talked about earlier today Brett's idea of like this quasi-fundamental information. So it's information that's not available in just the text that's out there. But I think you're going to have data sets that everyone has, and then you'll have the ability to still go and try to glean data that isn't available to everyone. I might even think that as these systems become more powerful, some firms will do less on the ground fundamental research for some reason. And so maybe there's still the opportunity there as that investigative journalist to do something new. Part of me still thinks it's still humans taking risk at the end of the day. And so you could have moments in time where you still have emotions and irrationality. And so you'll still have these temporal dislocations where something is discounted for a period of time where you can take advantage. You may even have an instance where all of the machines globally think wrong at the same time and really drive something down too far, or they drive something too far up. We'll see how it evolves. I don't think the markets are going to become fully efficient, but I do agree with you. They'll probably more fully reflect the information that's available even than they do today.
It's an interesting argument. I sympathize with Cliff Asness from AQR. His argument that the markets have actually gotten more inefficient over time. And if you look at the size of the hedge fund industry, which is 10x'd over 20 years, and you have massive firms now, they continue to generate alpha at a very industrial scale. And so even with the rise of quants and alt data and so much superior information at everyone's fingertips, there's continued to be really robust fundamental alpha for fundamental investors. I think a lot of it comes down to the constraint of other investors in the marketplace. You're competing against indexers and pods and these other players that there still seems to be this alpha pool that is that has sustained in this world of better information. Whether AI changes that or not, I don't know. I'd take the under on whether AI puts us out of business in 5 to 7 years. Part of it is your point, Jim, of someone needs to still go collect the information from the CFO meeting and analyze. A lot of business quality is a function of taste, and there's a lot of qualitative assessments that it's hard to see machines. Certainly, like the demos that I've done, today, November 2024, nothing scares me as it relates to compressing alpha pools, but these things are also rapidly evolving. So I think
I agree. Well, listen, I think the area that's going to be a loser is Passive. I think there's going to be this synthesis between active management and passive management. So you're going to take the best of passive, which is ultra diversification, ultra low fee, but you're going to have an active overlay, which is AI run. I mean, AI is no problem managing 1,000 stocks, right? Like, I think today the best investors can beat the machine if you're talking about a 20 stock portfolio. But if you task my team today to try to outperform an AI system with 1,000 stock portfolio, impossible. There's no way we have the capability to be actively managing 1,000 positions. We couldn't do it. But the machine, it can. So even if we think we're better than it with 20 companies today, we can't compete on 1,000. And that differentiator, that's only going to get wider over time. So I really think, instead of people just putting money in an S&P 500 fund, to say, why don't we have something that's actively managed? I mean, actively managed, that's sort of SP 500-esque, right? Like maybe it's, this is the S&P 500, plus it's going to take out the 10 or 15 names that the machine thinks are most likely to underperform for various reasons, right? And you've got that for the same fee structure. Why wouldn't you do something like that? And so I think over time, you're going to have this rise of kind of these new synthesis funds. And, maybe you get a little bit less alpha than is in the market today, but I don't think you're going to get it all.
Right. I think it's also like fundamental investors are great at adapting. Like when credit card panels first came out, you would see a signal, Chipotle is going to beat the quarter. All right, buy Chipotle. And then everyone started investing off of that data. So that data became commoditized the second it came out. And then the game became, where is the panel data wrong? And people are set up to be disappointed. So you're playing the second order. Then it's like, wait, everyone's playing the second order, so I'm going to go long. So there's this whole game of psychology around a lot of this data anyways, which I would assume then we're, in 7 years, we're trying to figure out where the AIs make mistakes, and those are our new alpha pools. So I would be shocked if, again, equities are hard to price, right? Equities are a function of discounting 35 years of free cash flows. So there's a lot of sentiment and creativity and emotion and discounting those, that vision of future cash flows. Ricky Sandler, who we had on for a session, said the last great edge in the markets is psychological. And to your point, Jim, humans are still going to be making these decisions, and the psychological alpha may be our last real source of alpha in markets.
I agree, but I think when I think about chess, so I'm a big chess guy, and obviously when Gary Kasparov lost to Deep Blue back in the mid-90s, the next 15 years of chess, the best chess in the world, it was really a combination of a grandmaster with the machine. Because ultimately, the grandmaster is great, but it's nice to have the machine to make sure you're not going full tilt and making some kind of just asinine blunder, which we as humans all make. I mean, I don't know any investor who hasn't made some stupid, dumb, ridiculous mistake in their portfolio at some point. And so if we can use the machine as an overlay to just lower the probability of us doing that dumb, stupid, ridiculous thing, I believe it's going to really help the results in the interim.
And that probably backs up one of the initial point you made, is a lot of it's cultural, right? Having the ability of the fundamental investment teams be open-minded and actually from the bottoms up build these tools into the investment process. That might be one of the biggest challenges in this shift. I had a question emailed from me. A few questions on how do you think about buy versus build for NLP, natural language processing? For example, could they out-engineer the group of engineers at AlphaSense in the sense that capturing the best, most accurate data signals out there, trying to do the same thing but have a deeper bench? Does it make sense to invest at the margin on top of an off-the-shelf process when the majority of the judgment and or fundamental investment process is done after the idea gen and or ranking systems provide the signal processing? Do you capture the question in there?
I think so, yeah. I mean, so I think buy versus build and then where. And, for us, we've always said buy versus build. So if we can get something off the shelf that works better and it's cheap enough, we'll just do that. And there's no reason not to. That being said, all of the firms we've talked to that are, multi-billion-dollar shops, they've all come to the same conclusion, which is if you buy it off the shelf, it isn't going to help you differentiate in any way, shape, or form because everybody has it off the shelf, right? I mean, AlphaSense is a great product. Don't get me wrong. I mean, especially now that they bought Tegas, they're going to have a data edge. That's just awesome. It's a great product. I will say, Portrait Analytics, the guy that was on last time, episode 2. We think that's a great product. We're very impressed by it, and I encourage you to go check it out if you haven't. It's really unique. Both have got some stuff for Valpost on there, I think is cool, and then ultimately the technology it works really well. So I know they're still developing. I will tell you, most of the AI providers, whether it's Rogo, FinTool, or the other people you would think of, you'll find that as they evolve, they all seem to go from trying to produce a tool that's going to be used by everybody to they say, we're an AI firm that's going to build custom solutions for the largest and most sophisticated investors, because a lot of the big people come to them and they want something that's bespoke and something that's unique for their process. And quite frankly, they don't want to share. They don't want to teach these service providers their process so they can then take that and sell it to everybody else, right? Because that's what consultants do. Consultants go in, they'll run a study for you, and if they come up with something useful for you, they're going to take it and sell it to the other 12 people that they're talking to who are all in the same vertical. And the investors are smart enough to realize that's exactly what's going to happen with these service providers. So don't think you're going to work with a service provider and get anything custom. It just isn't going to happen. And then, do you really want to trust your primary data, the thing that makes you unique, your secret sauce, your process, to a third party? Is that what you want to do, or is it something you want to have in-house? And so I think the way this is going to evolve is anything that's like simplistic. So, we talked about transcription. We built our own thing, but someone else is going to build it. Everyone will just buy that tool to do their own transcription. When it comes to being able to parse and source documents, AlphaSense is really great. When it comes to summarization, even today, all of these tools, really, they're using APIs to hit, they're using APIs to hit OpenAI or Claude. No one's going to build their own LLM. That's ridiculous. But it's really not hard with APIs to then kind of build your own system on top of it. So, happy to demo what we have for anybody if they want to talk some other time. We can show it to you. But we just built our own because it works really well, and we can then capture our own data and add our own data in with the external sources. And that's really where the secret sauce is being able to compare and contrast. Like, here's the work we did on Dollar General. Now, what does all the data out there say? And can you help us disconfirm any of the theses we've come up with? Or what has changed from our initial understanding on this business? Or where were we just wrong? And that's the value add, not us just going to something and searching or asking questions and then getting that and putting it back into our model. So
and that's my hunch too, Jim, is like an LLM on like a CapIQ data corpus is like, oh, that might be an interesting idea screening tool. But to actually be something that's really value additive in my process, I need to be able to ingest all data APIs and my management meeting notes and my internal estimates. And it seems like just getting all of that data tagged, cleansed, housed into that dashboard, and then having these tools on top of that, that's a very challenging. What does that process entail? It's not just plugging in an API, API.
So there's a limitation today, because I think there's one question out here I see where someone's like, hey, why haven't the large multi-manager guys done this? Why haven't whatever? And today there's a limit on LLMs. Most people understand this, but it's token count. So if you ask a question of a large language model, so I know most people have probably used Claude and tried to do projects, but you can put in 4 files at a time. If you go to Gemini, Google, you can put in like 8 to 10 files. Even with the APIs, which is what we use, we're limited to maybe 30 files at a time. And the reason is the LLM can only take so many words. Specifically, they say tokens. And a token, you can think of it like a syllable of a word. Maybe one token equals 1 word. But in essence, the current limitation for the largest models available, it can take about 2 of like the King James Bible at once. So about 2 million tokens. And that's the limit. So that roughly equates to maybe the last 5 years of a company's information. If you look at like 10Qs and transcripts, 10Ks, and a couple other documents, and that's it. So you just can't go back further than that or broader than that simultaneously. So when you're thinking about this secret sauce of being able to pull in all of this robust data and your internally generated data, there's kind of a limitation. But that's going to change very rapidly. These token counts will probably continue to increase exponentially, so maybe doubling every 12 months or so. And once you get to 4, 8, 16 million tokens, that's the game changer, because that's when the machine is consuming more information with each query than you have in your entire career on that business. And it's going to become powerful in a way we really can't imagine. Even if the machine weren't to become more intelligent, if it still just maintains that 120 IQ, just the fact that it has this encyclopedic knowledge base that it's touching to where it's not hallucinating is going to be phenomenal. So yeah, is everybody going to build this? Of course they are. The question is, are you prepared? Are you capturing your own data? Are you putting in the work to have the database necessary to do this, to compete with everybody else who is doing it? So it's coming, whether you want it or not.
And anonymous, I think the reality is all the large multi-manager platforms are working on this. Are working on this very vigorously. It was Bloomberg, I think, had an article about the Balyasny effort. I would be surprised if the other majors don't have a similar effort. I think in general, what we're hearing is that all of these efforts are still relatively early, whether it's these technological constraints with token counts or whether it is cultural and the process of changing individual teams' investment process is quite slow. The accuracy of these tools is still, in many instances, not up to snuff with what we demand from our investment process. So I think that's slowed adoption a little bit. But everyone I talk to is kind of looking for the firm that's like actually deploying this stuff at scale across all dimensions of their investment process. I'm kind of like, I don't think that firm exists right now. I think there are firms that are using for idea generation that are deploying it in other areas, but there's no leader yet. There's no real, as far as I could tell, one firm that's deploying these tools across modeling and idea gen and earnings season and thesis creep prevention, et cetera. I think it's all more conceptual right now.
Yeah, the people with the resources, it's the cultural change aspect. It's too hard. I mean, you've got a team where I guarantee you there is a senior member of that team, their entire career, they've been the idea guy. That's how they made their money, is they went out and they found those idiosyncratic ideas no one else had ever heard of. And they don't want a machine to come on and it can find better ideas than them, and their entire reason for being no longer exists. Or the other guy that's the workhorse, right, who just produces more quantitatively than anybody else. They're doing double the amount of research. And suddenly here's a tool that's going to help everybody else catch up. I mean, that's a scary thing. And when people have made a lot of money for a long time trying to change what they're doing, when they've gotten rewarded for that for 20 years, that's hard. I mean, we are much more worried about some other firm that's a startup that's well-funded, that has a great crew, that has DNA of AI as part of their process, than we are some large firm who's kind of changing and adapting. I mean, BlackRock is not going to be the one to put themselves out of business when it comes to passive investing. It just isn't going to happen. They can't. It's too much of a cash cow for them to wake up and disrupt themselves. So, yeah.
Another question. Have you been able to incorporate credit lenses to the filings of the companies you follow? Credit agreements have increased in length and play a critical role in understanding an equity turnaround story like Carvana. The other end of the spectrum, a company like Peloton is a weekly tested minimum liquidity covenant. What challenges have you faced when incorporating incremental credit complications? I like this question because in some of the tools I've talked to, startups I've talked to have found more adoption in private equity and investment banking than our buy-side fundamental equity research. And I think it comes down to the ability in private equity just to drop an LLM on a data room and digest big mounds of information.
Yep.
So this seems like a very good use case to me of if I'm looking at a stub equity and I don't have 3 days to go through all the credit documents to be able to summarize all these SEC filings and do credit analysis that is important and critical to my process, but I'm not necessarily a credit expert in that sense. Have you guys done anything on that with credit?
So we have not built something specific or bespoke to do this at scale. We have done this in individual instances, looking at particular companies, and I would say that this is the perfect use case for LLM. I think it is incredibly good at this, incredibly good. So, we always talk about willingness to partner with other firms. We're having conversations with, 3 firms today where we may actually partner in some way, shape, or form. I personally, I'm dying to find a credit firm that wants to partner because they wouldn't be a competitor to us. And frankly, I think our tools would be directly applicable to what they're doing. I mean, given that we're an equity shop that's very much focused on quality first, we don't have a lot of names where we have credit issues we're really watching. So it's not like our highest priority, but holy moly, I think what we have would be amazing for a firm that was really focused on credit. I think that would be huge. Or somebody who's doing distress, even in the equity markets, and credit was like a big focus for them. I think this could be a home run for
them. Could you please discuss about, I totally agree. Could you please discuss about the implications on the employment in buy side, particularly on juniors in recruitment, if Gen AI models could work as an agent capable of a junior intern?
Yeah, I think one, you need to be preparing yourself for the job that's going to exist in 5 to 10 years, which is more of a investigative journalist type role. Two, it would be if you're coming in and you have a foot in both worlds, you're going to be incredibly valuable. So what we've talked about again and again, it's this synthesis between our data team and our research team working together and becoming more one that's really driving value for us. So even in the last 3 months, we've started to iterate a lot faster with more and more communication between our research team because they're using our tools more, giving that feedback to the data team, and then they're iterating. It's been great. And so I think this is coming. It is going to happen. And if you can, while you're still in school, or you're going back and get an MBA, taking those extra classes in machine learning or data science, not because you want to be a practitioner, but so that you can understand the lingo, so that you can have those conversations and you can help with that iterative process. That's what's going to be driving value for these firms over the next 10 years, is you've got to be able to do both. You've got to say, this is what we're trying to accomplish from an investment or research perspective. Here's how we could do it on the machine learning side, and really being able to help those machine learning people who are world-class at that understand what's happening on the research side. Because I guarantee you, people coming out of a machine learning or data science program, they're not necessarily experts at finance. And while we might think it's easy, it may be boring to them. And so being able to kind of cross that chasm or that divide is an incredibly valuable skill set that's going to be needed.
Yeah, I don't particularly, see any evidence that the curve of hiring will be shifted. I think we're still years away from a 12-person investment firm saying, "Hey, we only need 8 people to conduct the same research." I think what is much more common is, "Hey, we're going to keep 12 people, but these 12 people are going to do more. They're going to be more effective, look at more ideas, uncover more KPIs, etc." So I think we're kind of, we can get into the whole economics of the hedge fund staffing model and the fact that for any institutional hedge fund, your junior analyst is a pretty small incremental cost. I think what may happen is, as PMs who didn't know how to run Microsoft Excel, when Excel came out, those people get pushed out of the business, and the new younger person who's more fluent in technology kind of takes those roles. And so even if there is some, bending of the curve, it's probably the older generation of investors that decide to hang it up. And so I've still been of the opinion, maybe it's a little self-serving, in the next 5 to 10 years at least, is going to still be kind of a strong and robust employment career. But listen, you got to be open-minded in this age of change, technological change. You got to be open-minded. So part of the reason we're doing this webinar series too is to check in and make sure that we won't be dinosaurs, and that we stay at the cutting edge of what's happening. Let me see, what else do we have in here? What big hurdles do you see in building a well-functioning AI system? How would the competition look like? Is 5 to 7 years an optimistic timeline?
You mean from zero? I'm not sure who the question is. Are you talking, if you were to start today at a large firm where you have resources, how long would it take you to build kind of a system A to Z? Or are you saying, hey, for us, how far are we to be able to build an agent?
I think more the question is an agent that can handle kind of the full stack of responsibilities. I think, to me, like, one area we want to explore more in this series is modeling. I mean, as we know, the financial model is really the chassis for the fundamentals investor process. So many edge cases, whether it's restatements or GAAP to non-GAAP. The financial model, I think, is still far from being automated with AI. And so, and the junior analyst in particular spends a lot of time running that model and evolving that model. So to me, what this question means by well-functioning AI system, truly integrated agent that touches all parts of the process.
Well, I'll be frank. I think it's possible today. I think the cost point or the price point of it would be prohibitive. I think it'd be cheaper just to hire another analyst who's really good. But I think it could be done. That said, I think it's going to be commonplace within 24 months. So maybe I'm crazy, but I just don't think it's that far. I know other people would disagree with me, but I had my own projections for when I thought we were going to have LLMs like ChatGPT, and our original estimate was 5 years after launch. So we thought it'd be 3 to 5 years, and it came within a year and a half. So those are my optimistic projections back then, and it exceeded it. So I don't think we're very far. Like if you use Claude Sonnet 3.5 today, its ability to extract numbers from the text is really good. Its ability to extract adjustments from the numbers is really good. The hard part isn't the model extracting the adjustments, it's being able to do that at scale and then apply it appropriately in a model. That's the hard part. So what's going to happen is you have these people developing their Excel models and you have Claude or ChatGPT getting better. The two of those will meet and cross within the next 18 to 24 months. And at that point, you'll be able to build a model if you know what you're doing and you can systematize the process. So I'm more than confident that our team's capable of doing that once we feel comfortable with the extraction, and then once we feel comfortable that we have a good model at plugging numbers into Excel. And it's the plugging the numbers into Excel where we haven't fully figured that out. I mean, we have our automated systems that do that. So I guess we'd have to build it, put it into the database, and then send it in. We haven't built it, but I think it could be done, and it's not going to be long.
What should we all be doing if this again exceeds timelines? What should we be doing today to prepare for that moment 24 months out?
Well, if it were me, I think a fundamental edge should start building their own fundamental edge system or agent. And you might have something you could train and then turn around and offer to people to kind of use as their co-pilot, right? Why not? And I think, frankly, I just think everybody needs to start exploring this stuff. Like, why not? Like, if you're not using it today, like I can't tell you how many senior analysts I know who still don't use ChatGPT or they don't use Claude. It doesn't even make sense to me. Like, I don't understand why you wouldn't use it as a sanity check. So when somebody does quarterly earnings, right, you get your report out. Okay, you're going to go through your standard process. Well, when you get done, why don't you take your write-up, or why don't you take whatever you put out, throw it in, and then pull in the transcript, pull in the presentation, pull in whatever their press release is, and just say, hey, is there anything I missed? Or is there anything you think I got a little off? And it's incredible the result you can get just doing that. And I can't tell you how many people don't do it, but it's like spell check, right? Like you would never send something out without running it through spell check now. Why would you not do this? Once in a while, it's going to catch a negative sign you forgot, or it's going to catch where you left your note in from last quarter and you forgot to take it out. And so start using it so you can figure out the real value that it adds to your own process. Why wouldn't you?
Yeah. That makes sense. Could you please talk a bit more about using AI to streamline processes such as writing investor letters, reaching out to prospective clients, the use of agents, compliance, etc.? I'll give you one. Our legal bills really reduced a lot with AI. Now we probably are our legal contracts may not be as good as they were when we paid a lawyer $600 an hour, but ChatGPT does a pretty good job at a first cut on legal disclaimers, etc. But what are you using in like operations for tools?
Totally agree. We do the same thing on the legal side. So we have the AI review almost everything. We do first drafts in AI, and it'll send it to the lawyer to get them to stamp it or to fix it or to review it, because it cuts the bill probably in half, if not by more. Obviously, we have SEC standards, so on anything that we do, we have to disclose that we're using AI. So we've kind of added that as a general disclaimer that pretty much everything we produce, we use AI in the process of developing those materials. So we use it again as a check on our writing to make sure that things are making sense. We use it to think about structure. When it comes to client reach out, we actually don't. We're going the other way because the AI is getting more automated and better. We're going to kind of handwritten notes, which we're not aware of how you can have AI do that. Maybe we have the AI help us with thinking through the text a little bit, but we're going to write it by hand. And that way people are like, oh, wow, this is real differentiated. So I think more of that in person. Like we're really big on traveling and meeting people face to face because we've realized that in the world that's coming, that's the skill that's going to set you apart, not just mass quantities of, sending stuff out there to everybody. So kind of going the other direction, even though we are the AI firm, it's a little counterintuitive.
Yeah, that makes sense. I forget what podcast it was, but someone talked about the quality of electronic AI music created today. But the fact is, people still want to connect with Taylor Swift or Justin Bieber, like that human element of the soul-to-soul connection, and many vectors of life will still be very important, even in this futuristic, AI-driven world potentially.
Well, I'll tell you one use case that really shocked me is I've never been good at developing poetry, and I have a lot of ideas and thoughts that I want to communicate, but I'm not. That's just not who I am. I'm not a wordsmith where I can put it into that format. And so when I craft a narrative or I craft like a longer block saying, hey, this is the emotion I'm feeling, here's why, here's what's behind it, and then I ask the AI to actually put it in the poetic form of a certain poet. So you can do like Ezra Pound or Robert Frost or whatever. I've been absolutely shocked by the emotional depth of what's come out. I really have. And I think it's something that's been underappreciated. But song lyrics, etc. If you give it the general ideas, it's very good of crafting that in a format, and it can be evocative. I mean, I found myself, emotionally moved, and maybe that's just because I'm a nerd and so I'm not good at this stuff. But I actually think it's underappreciated when it comes to its ability. It's not great at crafting the underlying ideas, but if you can give it the underlying ideas, I actually feel like it's better at the form than many of us. I mean, I'm sure there are people with the artistic IQ that's 160 plus that are still laughing at it, but for those of us who are mere mortals when it comes to being a poet, it's really something else.
My wife has been exploring writing children's books where she like puts the concept in of kindness or whatever, and they're pretty good so far. We'll see where it goes. I might retire if she hits the bestsellers list, so we'll see. Maybe let's take one more and then we'll go to kind of closing. What do you think is a primary limitation to AI's adoption in the investment process today? The level of compute power, AI infrastructure, or the level of expertise among investors in utilizing the technology effectively? How do you see this evolving?
So I'm a big fan of history, and there was this book written in German, probably 30 years ago at this point. It was called The Wall Jumper, Der Mauerspringer in German, and it was this idea, this like the central idea of this book was that when the Berlin Wall fell, the author, he's like, listen, to tear down the Berlin Wall in people's minds will take a lot longer than to tear down the physical wall. And the reality is, it's like physics. Whenever there's a new idea that comes along in the discipline of physics, they always say you have to wait for the old guard to actually die off before the new idea can kind of proliferate, just because that's the way that it works. And I actually think the limitation is the people who are currently sitting in the seats of power. I don't know how else to say it. Like when I look at the technology and what it can do, and if I'm objective about it, I believe it's so much better than what people are giving it credit for, and that it should be broadly used in a way that it's not, and it's not expensive to deploy it. But people don't want to do it because they don't trust it, or because, again, it's threatening to them. And so I think that's the primary limitation. I really don't think it's finances, and I don't think it's capability. If that were the case, the amount of money that Microsoft, Google, and Amazon are spending on this, they wouldn't be spending, right? I mean, you look at the earnings calls for all three of them from the last quarter, and they all said the same thing, which is, listen, we're having triple-digit growth in the AI part of our businesses. It's growing 3 times faster than any other business we've had. It's the fastest to ever reach 10 billion run rate. And oh, by the way, if we'd been able to give more supply, we would have had even bigger growth. Demand is outstripping supply in the fastest growing technology of all time. Well, there's a reason for that. It's that it's transformative, and for whatever reason, in our industry, I think we're actually slower adopters. We're more careful. We're scared, and that's okay. Just because something hallucinates doesn't mean it doesn't have value. The reason you're sitting in the seat is so that you're working with it to ensure it doesn't make a mistake, just like it's hopefully going to help make sure you don't make a mistake. So it's a great question.
Yeah, awesome, great. Well, maybe that's a good place to stop unless you have any kind of closing thoughts or recommendations. You mentioned, kind of potential partnerships. Maybe tell us a little bit about that. If anyone's listening to this and interested to reach out, what's the best way to get in contact with you?
Yeah, well, I don't know if you have our email listed any place, but I'm Jim at SaguaroCM.com. Tyler's Tyler at SaguaroCM.com. Our website's out there. We've got a primer that's kind of available. And our thought process is real simple, which is everyone's going to have to do the same thing to prep for the world that's coming. And so we don't see any reason why partnerships wouldn't work, where as a group, people pay for things once and then can all use it, as opposed to everybody kind of paying on their own. Obviously, on the data side, they're probably still going to charge based on how many people are using things. But otherwise, you're going to build a database, host stuff. Why not do it one time and do it at a world-class, top decile level? If you're going to build some kind of chat interface system, why not do that at a top decile level, as opposed to doing it on your own? So we're open to that. We think it's the way to kind of accelerate, move things forward even faster. But I think it'd probably be a deep getting to know each other type thing. But we're very open to that. And frankly, if you just want to learn more, ask specific questions of how you can apply stuff to your firm, we just believe in karma, I guess, and we want to help people out. We believe if we do that, people will help us out too. So happy to have a conversation with anybody.
That's great. Well, thanks so much, Jim and Tyler. This was I learned a lot. A great check-in terms of where we're at and the evolution, and who knows, maybe we'll have you back for the next episode in 24 months, and we can look back at this session as like, wow, we really didn't see this coming. As we're all looking for new jobs, as Jim and Tyler built the machine that put us all out of business. So it will be a fun evolution to watch.
Maybe we'll be interviewing an AI instance of Jim and Tyler.
Yeah, it'd be like Max Headroom back to the 1980s. I think only Brett and I are old enough to know who that is, but it's good. All right.
Awesome. Well, thanks, guys. This was great.
All right.
Thank you.
Take care, y'all.